I'll start off with a disclaimer. The following is not investment advice and should only be used for educational or entertainment purposes. The opinions are my own and are not those of the Hedera Hashgraph team. Now to the meat. Hedera Hashgraph has the most potential since Ethereum, and likely more. This potential is both technologically and from an investment perspective. There are plenty of resources discussing the technology, and I'll link to some below if you're interested. But I wanted to focus on the cryptocurrency as an investment, since there hasn't been too much formal discussion on the topic. This is likely due to the actual tokens not yet being available to the public on exchanges. First, a few general facts about Hedera. Hedera is a cryptocurrency platform based off of Hashgraph technology. There was a simple agreement for future tokens, or SAFT sale, held for institutional and accredited investors in mid-2018. This phase has now been completed, and $104 million was raised to help fund the development of the platform. The tokens, called HBARs, were sold in the SAFT for between 9.6 and 12 cents, depending on the lockup period agreed to by investors. I'll use 10 cents when discussing SAFT pricing to make things simple. If all goes as planned, the next opportunity to invest will likely be in late Q1 of 2019, when the initial distribution of the tokens will take place. At that initial distribution, there will be 3 billion tokens released. 1 year after that point, there will be about 5 billion tokens in circulation. And at 5 years, that number will be no more than 17 billion. There's a hard cap of 50 billion tokens in place that is targeted to be reached at 15 years after initial distribution. The vast majority of the tokens will be distributed on the open market, and the proceeds will be used to fund the development of the network. If the assumption is Hedera will be successful and valuable, this distribution model will maximize the funds available for the advancement of the platform. So what are the reasons Hedera has such tremendous upside potential? It falls into a few categories. First, the strength of the tech. Second, the strength of the team. And finally, the price. Other platforms have some of the strengths that will be mentioned, but none bring them together to anywhere near the level of Hedera. This combination creates a truly unique cryptocurrency story. And as we know, a great story goes a long way in the investment world. So let's dig a little bit deeper into each one of these aspects. I'm just going to hit on the highlights to show how much of a standout Hedera really is on this front. The headline feature is the throughput, measured in transactions per second. There are some variables, but in general, the throughput during testing has been hundreds of thousands of transactions per second, with only a few seconds of latency. And these few seconds are all that is needed for 100% certainty, compared to other platforms which are only probabilistic, meaning you're never 100% sure. In the case of Bitcoin, they generally consider the transaction confirmation to be good enough after an hour. Hedera is designed to be sharded. Hedera's 6-figure throughput is per shard. With a few dozen shards, you will reach millions of transactions per second. Hundreds of shards would give you tens of millions, and so on. This will allow for true on-chain, or more correctly, on-graph, micropayments, the holy grail of distributed ledger tech. The next aspect I wanted to point out is the fair, accurate timestamp feature. Each transaction will be assigned a timestamp based off the median timestamp of all the nodes in the network. There may be a node with an incorrect timestamp, but the median of all the nodes should be very accurate. Compare this to Bitcoin, where the timestamp can't be trusted and isn't precise. Bitcoin block timestamps are generally considered accurate only to within an hour or two, and there's no guarantee your transaction will even make it into the next confirmed block. So why is this feature important? With accurate timestamps, a world of use cases opens up. A couple of examples that have been given are exchanges and video games. An exchange can't operate fairly unless it can determine the order in which the bids and asks were received for stocks, bonds, crypto, or other tradable assets. Likewise, a multiplayer video game built on a DLT network needs to know if player 1 shot first, or if player 2 dodged first, to determine if it's a kill or a close call. So again, accurate, precise times are critical. These and countless other use cases are not possible with current top platforms as is, but are with Hedera, and this feature shouldn't be underestimated. Also, the Hashgraph technology doesn't use unnecessary resources. Our debt-based fiat monetary system must grow as a feature, or more accurately a bug, regardless of if that growth helps society prosper. This manifests itself in too many oil wells being drilled, causing a glut, lowering prices and causing excess usage, or too many houses being built that are needed, with devastating consequences. Here's an example of a building in China being destroyed after having never been used. I feel for the guy who did the drywall, but this is what you get from a growth-hungry monetary system. A system that must grow, frankly, kind of sounds like a cancer. Proof-of-work cryptocurrencies are no better, doing energy-intensive computations that serve no purpose but to slow the network down for security reasons. The green aspect of Hedera should help adoption in the environmentally conscious tech industry and the general public. Not only is it environmentally friendly, but it does so while maintaining the highest level of security, asynchronous Byzantine fault tolerance. Few other platforms even try to claim this level of security, while Hedera has proved it, in every sense of the word. But you don't have to take my word for it. George Gilder is a bit of a tech prognosticator. Here he is explaining one of his projections from way back in the early 1990s.
Well, I wrote back in the early 1990s, I wrote Life After Television and said that the computer of the next era will be as portable as your watch, as personal as your wallet. It would recognize speech. It would navigate streets. It would collect your news and your mail. It just might not do windows, but it'd do doors. It opened doors to your future. And Steve Jobs, I've since learned, bought the book in volume and passed it out. So I imagine that I might have had a small influence on the rise of the iPhone.
Pretty accurate prediction, don't you think? So what is he saying now?
If you don't think it can happen fast, remember that in 2008, the world's 4 top companies in market cap were Exxon, Walmart, China Petroleum, and Industrial and Commercial Bank of China. And those were the world's top companies in valuation as recently as 2008. In 2018, an amazing change, an amazing revolution. Apple, Amazon, Google, and Microsoft became the 4 top companies in market cap, with Facebook lagging behind in 7th. An amazing triumph for the companies of the Google era. How did it happen? Well, my basic principle from Scandal of Money and Knowledge and Power and the information theory of capitalism, that in an information age, economies can change as fast as minds can change. That's a crucial fact to understand. These great, giant, Leviathan companies seem impregnable until they fall. And we remember IBM and Digital Equipment and HP and all these giants that seemed previously immutable, but that are now subsiding into the background of our lives. In 2023, if you project from today, you might suppose that the 4 leading companies by market cap will be Chinese. The growth trajectory is larger in these, and Alibaba, Tencent, Baidu, ByteDance, these could be the companies of the new era. But I believe that instead it's going to be companies like these, the cryptocosm. Bitmain, Ethereum, Neo, which is the Chinese Ethereum, and Hedera, which is based on a different cryptographic formula that uses the same kind of techniques that the blockchain does, but purports not to be a blockchain. It does rounds rather than blocks. And that's the crypto.
I'm pretty impressed that a network that has yet to be publicly launched has gotten a pole position in his latest prediction, including over a more established company-related cryptocurrency. Here are some of the highlights and achievements of the co-founders Mance and Lehman. They have gathered a team that is nearly as impressive in their own right. There's plenty of brilliance in the blockchain DLT space, but brilliance doesn't necessarily mean innovation, and certainly doesn't guarantee a great leap in technology. Brilliance must be coupled with hard work, determination, and call it a muse or luck. I think Lehman, the inventor of the technology behind Hedera, had the right touch of each of these to produce a game changer. This next point on the team cannot be overstated. This team is hands down the most professional and business-savvy team in the space. But why tell you when I can show you?
Raising the bar for the industry, we're Hedera. We consider this a mission to maximize the internet to what it can be tomorrow.
'Cause I'm the new best thing, better than you've ever seen.
Fair, fast, and secure.
Trusted transactions, whether that's voting or consensus.
First of all, it's not fairness, it's fairness of ordering, fairness of timestamps, fairness of access.
We open up a whole new genre of applications.
Out with the old and in with the new. I sparkle like a ruby pot of gold for you. All sugar and spice, you know I'm not nice, but I'll send you down the road straight to paradise.
The Hedera Hashgraph technology platform has implications that stretch all the industries on planet Earth.
I'm the new best thing.
This level of presentation is what you would expect from Apple or Amazon, and is a standout in the space. And this professionalism extends far beyond putting on a presentation. The team didn't just rest on an amazing invention. They looked at the issues plaguing blockchain adoption and set out to systematically address each. The organization is developing a fee structure with proper incentives, and their promotion, communication, and development of the platform has been a breath of fresh air in a space that needs some adults in the room. They have also engaged with regulators, such as the SEC, to ensure that they are currently and will be compliant with all applicable regulations. The draw for enterprises looking to get involved with and build upon a DLT network will be immense. No matter how good the idea, how strong the tech and team, there will always be a price when the investment no longer makes sense. So let's take a look at the limited price information we have and speculate on the future. Since there are vastly different supplies for each cryptocurrency, I think that market capitalization is an effective tool to use when looking at the value of a particular platform. Market cap is simply the price of a unit multiplied by all the units in circulation. Before digging into Hedera, I want to widen our lens a bit and ask a question because we'll touch on it later. First, let's calculate the total market cap of the entire cryptocurrency market by adding the market cap of each individual cryptocurrency. Now for a question. Can you see the market cap of the whole cryptocurrency space, a worldwide phenomenon, growing to equal the money supply of a medium-sized nation? Well, measured in dollars, the M2 money supply of Italy is 1.7 trillion. France is 2.5 trillion, and the UK is over 3 trillion. Considering the current total market cap of the crypto space is about $200 billion, if your answer to my question was yes, there is an order of magnitude of growth in the space as a whole. Could there be more potential? Sure. But let's not think about taking over world commerce quite yet, and be happy with a possible 10x. Now let's move on to what the market cap of Hedera looks like. Since it's the only pricing information we have at this point, we'll use the SAFT price. Some have indicated that the SAFT offering was overvalued. Mance, one of the co-founders, said the pricing was conservative, but could not go into detail due to regulatory restraints. So who's correct? Luckily, not being an employee of Hedera, I don't have the constraints that Mance does, so I can point out why the SAFT was conservatively priced. To do so, I'm going to focus on supply over the medium term. In investing, medium term usually is considered between 1 to 3 years, but I'll push it to 5. I will not use total supply of 50 billion HBAR that will be available no earlier than 15 years from initial distribution, because in an industry that is changing as rapidly as this one does, that time horizon is much too far out. 10 years ago, Bitcoin was just an idea. 6 years ago, it was trading in double digits, and Ether wasn't even with us yet. I think you get my point. As a financial industry norm, the value of an asset is calculated by multiplying the units circulating by the market price. This is true for stocks, bonds, fiat currency, and even gold. The future potential supply is considered by market participants and factored into the price. From my observations, circulating supply has far more effect on price. This is understandable, bearing in mind that the circulating supply is what affects liquidity and the supply and demand dynamics in the marketplace at any given time. This is also the methodology used on the valuation standard in the space, coinmarketcap.com. So to get back on track, at initial distribution, based on SAFT price, the total market cap for Hedera will stand at about $300 million, $500 million a year after that, and even after 5 years would only be about $1.7 billion. Now, based on the tech and team, I believe Hedera will compete with the top cryptos in short order. So let's take a look at some of those. Here's a recent market cap for Ripple and Ethereum, but those numbers were after a bear market. We've gone through these downturns several times in the past. If the history of this market is any guide, we will see a bull run likely make new highs, and eventually reaching a bubble phase. Here are the heights that these platforms reached in the last bubble phase. But also consider that the total market cap of the cryptocurrency space only reached $800 billion during that run-up. What if during the next bull run, the space gets on par with the money supply of France, as discussed earlier? That spec in the lower left is still the medium-term Hedera market cap based off of SAFT pricing on this vertical scale. I see why Mance thought the SAFT pricing was conservative. Hedera has many features that make it a natural diversification. It is not open source, but open review and patented. Some see this as a negative, but it was put in place to address a specific major issue, to prevent unwanted and counterproductive forks of the network. What can't be denied is this will make Hedera pretty unique among the top public platforms. Thus, even if you don't think it's a good idea, from a portfolio standpoint, Hedera would be a good pickup to diversify. Many experts, including Andreas Antonopoulos and Mike Novogratz, have discussed how they don't know which blockchain or DLT will end up on top, but they agree one or a group of them will change the world. There is no preordained winner in this space. Bitcoin has some huge advantages as the first mover, but even the big dog may fall. While doing my research in this nascent asset class, I learned early on that staying nimble and not becoming emotionally attached to a specific coin is paramount. Investors need to watch new technology closely and diversify when platforms with high potential arise. I put these diversifications into 2 buckets. The just-in-case bucket, where I'm not overly excited about the tech, but through humility, understand I could be missing something, so throwing some money into the ring makes some sense. The other bucket is for real contenders, and for me, warrant a more significant investment. I've only had 3 make it into this bucket. The first was Bitcoin. The second was Ethereum. And no surprise, Hedera is number 3. Ethereum is now slowly being downgraded into the first bucket. Now, considering Warren Buffett completely missed the internet revolution, I don't think he should be held in high regard when discussing technology investing. That said, his opinion still carries a lot of weight in the investment world. He believes the following: both Bitcoin and gold are strictly speculative and don't produce earnings and dividends like stocks do. If this is Warren's metric for dismissing DLT tech, he may want to take another look. Frankly, I think dividends are a huge reason why equities are generally the best way to build wealth. Now back to the point. Hedera is a proof-of-stake system, so you will essentially be paid a dividend simply by owning and staking your tokens. This has been built in as a pain-free return on your investment. Now, this is not money for nothing. It's compensation for helping the network function as designed. Network users are paying you for aiding and maintaining the Hedera system. This is just like a stockholder getting paid dividends by users of a company's services. Granted, those funds have to make an extra stop and be determined and distributed by the company first. Sure, 1,000th or 1,000,000th of a penny transaction fee sounds small, and with the transaction volume being small when the network is in its infancy, the fees collected from staked tokens will be negligible. But when the platform is processing billions or trillions of transactions per day, the fees could be very significant. Owners will take this into account when buyers are trying to entice them to sell. It will also incentivize owners to promote usage of the network. Another support for the price is the fact that it is a stated requirement of Hedera to have a high price and make it cost prohibitive to gain 1/3 plus 1 tokens to prevent attack. There's one goal that is often touted by entrepreneurs. They want to change the world. Even if this was the only goal of the Hedera team, this security requirement would still incentivize them to promote a high price for the token. This next aspect intellectually drives me nuts, and I want to ignore it, but that would be ignoring something that I think has real, if frustrating, effect on the market. In the crypto market, it appears, all else being equal, that a high supply, low price token will outperform a low supply, high price token. I believe this is simply because unsophisticated retail investors believe that with a lower price, there may be more upside potential. Of course, beyond the short term, this is probably not the case, and is why we look at total market cap to determine the market value of a platform. But from what I have seen, lower price coins seem to have somewhat of an advantage, especially when bubble dynamics take hold. Prices can also be too low, where participants may shun a coin that is too cheap, believing there is good reason for the low price, similar to penny stocks. I believe there is certainly a good range to stay within, from say about 5 cents to $100, with the ideal range being from $1 to about $20. Hedera will very likely always remain within the good range, with a real shot to be in my optimum range. Said another way, I believe the team chose the correct supply considering the potential network value. This is a minor factor, but a real one, and worth mentioning. Here's the price of some of the top cryptos if they made it to $1 trillion market cap, based off of long-term supply. Full disclosure, I participated in the SAFT, and why not? I obviously see the potential in the investment, and I qualified as an accredited investor. So of course I put my money where my mouth is. There were plenty that were frustrated that they could not participate, and this is understandable. But Hedera had little choice but to follow the regulatory framework that Hedera's competent legal team, and likely the regulators themselves, inform them that they must. But this brings me to my next point. There's plenty of hype around this project, with just about 1,000 people that have a vested interest. As you can see in this video, when someone has a vested interest, they feel free to promote. I fully believe everything I've laid out, but I am psychologically free to lay out my bull case in my own best interest. There are plenty that are watching Hedera very closely, see the benefits, and have the desire and means to shout their opinions from rooftops. That said, they want to wait until they have a core position before they begin promotion. I, like many others, was a cryptocurrency skeptic, but saw the potential and finally invested. It wasn't until I had skin in the game that I did the proper research and got really excited about the tech. The same has happened for many others, and it seems as close to a constant among participants as you can find. You may be among those who experienced something similar. Even some of the naysayers will buy some HBAR, even if just for a small diversification, and their opinion will flip in short order once they have skin in the game. Being brand new, Hedera will exude the next big thing aura, certainly more than the established top tokens. If there is anything potential investors will be hungry for in the next bull market, it will be the next big thing. Some are concerned that large stakeholders will dump their tokens as soon as they hit exchanges. After all, there are many, such as employees and seed investors, who will have large amounts of tokens. I don't see this as a big threat to the price. Unneeded supply in the face of demand? Sure. But I don't believe it will cause the dip that some expect. While there will be some selling by these stakeholders, they will not want to damage the market, and what many of them have worked so hard to create. As discussed, the team has acted professionally in all aspects of their business, and I think they will take on the role of market maker as a responsibility just the same. The strongest reason I doubt there will be a disorderly dump is my own plans. I have a significant portion, and I'm not planning on selling anywhere near the SAFT price. I may even consider adding to my position when it hits exchanges, even at a small multiple of the SAFT investment price. You may wonder why I would not just have bought more in the SAFT. The reason is simple. There will be far less risk if and when we get to that point. Powerful partners and council members will have been announced by that time. There will be no risk wondering if, when, and on what exchanges the coins will be listed. There will be no lockup period, as there will be with many of the SAFT coins. This has tax implications. The development of the platform will be further along, with more potential use cases coming to light, and the list of reduced risks goes on and on. Okay, it's not all good news. There are some cons. First, Hedera is unproven on the scale that will be necessary for a worldwide platform. Also, there's a figurehead in Lehman. Without him, the platform would struggle. Though this is true for most platforms except Bitcoin, with Hedera and Lehman, it is stronger than most. Cryptocurrencies, as of now, are speculative assets, and as such, it is more about the story than what they are actually currently accomplishing. Once the hopes of their potential are realized, much of the upside will likely be gone. Bitcoin has a great story. It has the first mover advantage, it has no real figurehead, and it is likely where institutional money will first flow. But all of these are already baked into the price, making Bitcoin the most valuable cryptocurrency at over $100 billion. I hope I have laid out that the Hedera story is on par with, if not even more compelling than Bitcoin. But the price at which it will come to market will likely not reflect all of these positive factors. That's where opportunity lies. My conviction could not be stronger than it is with Hedera. But that's just me. What's important is that you do your own research and make an informed investment decision. Good luck.